So, strategy on the part of the CBK to raise interest rates aggressively, to come into the market through reverse repos, to curb speculative trading, to try to create a parallel forex market. All of that seems to be paying off at the moment.
Good afternoon, Lerato. It's lovely to be here. Yes, indeed, the central bank's moves are generally bolstering the shilling, so it looks positive from this particular point. Now, however, on the market, one has to really consider the pent-up demand because psychologically everybody is still anchored at the 100 shilling to the dollar mark. So immediately we see the dollar, losing some ground and the shilling gaining ground. We start to look at the shilling in terms of it being quite a bargain. So there's some pent-up demand. So over the next period or so, it's expected that there'll be some increased shilling pressure. But all in all, the central bank's moves really are bolstering the shilling.
All right. Any interest that piques your attention on the fixed income side? Because we do know that interest rates have risen, and what that basically has done is push up the yields. But the big problem for Kenya is that with inflation over 17%, the interest rates are still not strong enough to countenance the impact of inflation. And as a result, Kenyan security is not looking very attractive.
That's quite true. Remember, the fixed income securities really are indicative of two particular things. One is the expected growth, and two is the inflation rate. Now, with the inflation being so high and the economic growth expected to slow, then really one doesn't look at the interest rates very positively. And what we're beginning to see is the possibility of an inverted yield curve. Already the 182-day T-bills are a bit lower than the 81-day T-bill. So an inverted yield curve looks pretty likely at this point.
Let's take a look at what's happening on the equity side. We've seen some gains and lots of activities on the KCB counter. At least the losses that we've seen in previous session, they're starting to reverse that trend. And now KCB's announced a management shake-up over and above a major executive shake-up we saw earlier in the year. What's the strategy for the bank?
Well, at this point in time, when the economy is hard hit, KCB is not in a particularly favorable position. It's always wise to try and shake up management and see if new players could actually deliver. Now, with KCB, there are quite a number of issues on the fore. One, we have a liquidity crunch. We have expected poor performance owing especially to the bond portfolio. We have increased challenges in terms of getting out the loans because of slower uptake due in part to the high interest rates. So all in all, to cap that off, we have quite a number of foreign interest exiting the counter. So KCB is really not in the best of places at this point in time, and whatever management can do to try and bring in more investor confidence, it would really be a great thing.
Right. Lots of movement on the banking side. We've seen also others like Cooperative Bank also coming to the fore, Barclays Bank, but it seems like the gainers today, major gainers on the share price, have been companies like Car and General, Rio Vipinga, Unga, Sydney. Now obviously for some of the agro stocks it's to be expected, because obviously a weakened shilling in recent weeks has driven up their revenues. But what do you make of some of the other companies? CNG's had some drama recently.
Well, for CNG and Unga Group, the volumes really were not particularly heavy. So it's a bit difficult to really get out a lot of news from that low volumes that we've seen today. However, on the agricultural side, where a lot of people are drawing their interest from, and recently we've seen quite a number of people come out and say that we really need to relook at the agricultural stocks because of the very prime properties that they hold. Now, my take on that is a bit on the contrarian aspect, in terms of one really still needs to go back and look at the cash flows, and those indeed are quite positive because of the poor performance of the shilling. But on the other hand, looking at the assets, I'm not particularly confident that one should really pay a heavy premium because of the asset exposure.
Right.
Remember, the revaluations of those properties may make statements or results look positive, but it ultimately does not improve cash flows,
right.
and ultimately the shareholders won't have a heavy dividend.
All right, and then on the loser side, we are seeing a bit of pressure on KQ. Now, we know that there was this AGM last week. They're going to be doing this rights issue, paying out some dividends, but none of that seems to have abated. The stock declined to 23 shillings today. How do you explain that?
Well, Kenya Airways in the market is of the opinion that we are likely to see a rights issue come in somewhere in between the mid-20s towards the lower 20s range. So with the general market performance really not being bullish, one would expect that the share will continue to slide up to those particular levels. So anything above 26 shillings for the market, it looks like it overpriced at this point, much as it is not. But it looks that with the market expecting a share rights issue at about 22 to 25 shillings,
right.
then really one would expect that share to come down.